Hey everyone, welcome back to Corporate Dakota, the place where we uncover the hidden truths buried in corporate filings. And no, we are not talking about a blockbuster movie, but a real-life corporate drama unfolding with Future FinTech Group Incorporated. So Future FinTech Group Incorporated just dropped a report that is a bit of a mixed bag, a lot of moving parts, and a major, as set sail that leaves us asking what is next for the company before we dive deep into this one. If you are looking for clear, no-nonsense analysis of company reports, and you appreciate when we cut through the jargon to get to the real story, make sure you are subscribed. Also, if you want to connect with other corporate finance enthusiasts and get even more exclusive insights, join our Discord community. The link is in the description below. Alright, so what we have here is a Form 8K, which is basically a report of a major event that shareholders should know about. And the big event for Future FinTech Group Incorporated is a sale of a subsidiary. Its wholly owned subsidiary, Future Commercial Group Limited, sold 100% of its stake in Future Commercial Management, Hainan Company Limited, to a company called Xi'an Yinxi Trading Company Limited. Think of it as Future FinTech Group Incorporated saying goodbye to one of its children in the business world. This sale happened on the 16th of December 2025, and it marks a significant shift. This subsidiary was a Chinese entity that Future FinTech Group Incorporated fully owned, and it was consolidated into their overall financial picture. Now, after this sale, it is no longer a subsidiary. Now, who is this buyer, Xi'an Yinxi Trading Company Limited? The report assures us that this buyer is an unrelated third party. They emphasize that before this deal, there was no significant connection between the buyer and Future FinTech Group Incorporated or its insiders other than what is related to this agreement. This is important because it suggests the deal isn't some sort of backroom handshake between related parties. Let's talk about the money, and this is where things get a little more interesting. The total price for this subsidiary is RMB 10 million. That is about 10 million Chinese yuan. This payment is split into two parts. RMB 2 million was due within 10 days of signing the agreement, and the remaining RMB 8 million is to be paid within 20 days after the deal formally closes. But wait, there is more. On top of the cash payment, the buyer is also taking on debt. The subsidiary owed other parts of the Future FinTech Group Incorporated family a total of RMB 65.87 million. These are essentially intercompany loans between different branches of Future FinTech Group Incorporated. The buyer is now responsible for repaying these debts to entities like FinTech's Supply, Chengdu Company Limited, and Future Big Data Chengdu Company Limited, among others. It's like when you sell a house and the buyer agrees to take over the existing mortgage. Now, here is a crucial detail about that debt assumption. While the buyer is taking on the debt, the report actually says that Future FinTech Group Incorporated, the seller, is responsible for settling these intragroup liabilities within 3 years after the closing. So essentially, Future FinTech Group Incorporated is still on the hook for this debt in the long run. If any payments are late, they'll even have to pay 5% interest per year on overdue amounts. This is a key point because it softens the apparent cash injection and makes the debt resolution still a Future FinTech Group Incorporated concern. Interestingly, the company states that this sale is not considered to involve a significant amount of assets for the purpose of this particular filing. This might suggest that while it is a full disposal of a subsidiary, the financial weight of this subsidiary within the larger company structure wasn't deemed material enough to trigger more stringent reporting requirements beyond this 8K filing. Now, for the publicly traded parts of the company Future FinTech Group Incorporated's common stock is traded on the Nasdaq stock market under the ticker symbol FTTEV. So while they are selling off parts of their business, their main stock is still trading on a major exchange here. And as is standard with these reports, they've listed the exhibits filed with the report. The main one here is Exhibit 2.1, which is the Securities Transfer Agreement dated the 18th of November 2025 detailing the sale. And of course, Exhibit 104 is the interactive data file that helps investors analyze this report more easily. So let's put on our Warren Buffett hat and see what this all means. On the surface, this is a divestiture. Companies sell off parts of their business for many reasons, perhaps to focus on core competencies, raise cash, or exit a less profitable segment. The fact that they are selling a subsidiary in China could indicate a strategic shift away from certain markets or operations. The purchase price of RMB 10 million, while not insignificant, seems modest compared to the RMB 65.87 million in debt that the buyer is also assuming. However, the kicker is that Future FinTech Group Incorporated is still ultimately responsible for that debt. This means the net cash generated from this sale is 10 million yuan. And if this subsidiary was a significant source of revenue or profit, any impact of its absence remains to be seen. We are not given any specific financial figures for the subsidiary itself in this filing, but we know it is a PRC entity. The company clearly wants to manage expectations by stating the asset disposition was not significant. This could be a way to avoid triggering further disclosure requirements or investor concerns if the market perceives the sale as a negative. However, any sale of a subsidiary, especially one that was previously consolidated, requires careful consideration by investors to understand the impact on future earnings and the company's overall strategic direction. So, what is the story here? Future FinTech Group Incorporated is streamlining its operations, possibly by shedding a unit. The financial impact of the cash received is tempered by the continued responsibility for the subsidiary's debt. The key question for investors will be why this disposal was made and what it means for the future growth and profitability of the remaining business. Is this a sign of financial distress or a strategic move to a stronger position? Without more context on the subsidiary's performance and the company's overall financial health, we have to wait and see. Looking at the broader picture, Future FinTech Group Incorporated is navigating the complex landscape of global business, and this sale is a clear indication of strategic adjustments. The next filings will be crucial in understanding how this divestiture affects the company's financial statements and its operational trajectory. We need to watch for any shifts in revenue diversification or profitability that can be directly linked to this sale. Alright, that is our breakdown of Future FinTech Group Incorporated's latest filing. What is your take on this asset sale and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.